Is Ottawa's housing market finally cooling off? Or are we gearing up for an even busier 2026? In this January market update, I'm breaking down what's actually happening behind the headlines in Ottawa's real estate so you can decide whether now is the right time to buy, sell, or invest. After a very quiet finish to 2025, Ottawa is heading into the new year with a more balanced market. So that means more choice for buyers, motivated sellers, but realistic sellers as well, and prices that have been steady rather than swinging wildly like some other Canadian cities, nicknamed Toronto and Vancouver. In today's video, I'll walk you through January's numbers for sales, new listings, and prices here in Ottawa. Plus, what rising inventory and recent interest rate relief actually mean if you're thinking about making a move in 2026. All right, everybody, now jumping in straight to the stats. So first things first, we're just going to look at the basic stats here, the new listings per week. This is the first week of January, so obviously we're not going to have much data to work with, but we can see they started off below 200 new listings a week. We're at 103 for the week. Start up the new year, first week again. Sold, somehow we did end up 77 sold this week. How that happened was obviously through the last few weeks of December, there were some conditional sales. Now they went firm, so that means they have officially sold. Obviously, that's a year difference of 22%. And the average price point has started off at $627,000 for residential, and for condos, $534,000, a 0.1% difference. Obviously, these numbers don't mean much. Just because it's the first week, it doesn't mean anything right now. But let's get into some deeper stats. So let's take a look at something a little bit different. So here we're going to see the active listings, right? And then we're going to go take a look at, this is the months of inventory. So very high. We are at just above 6. So I think it's 6.3, 6.3 months of inventory. That is a heavy buyer's market. That is what it's considered, right? We were in kind of a balanced market. Right now it's January. It's going to be tend towards that, right? Average sale price, right? Because there wasn't so many sales, we're at 664,000. And that started, 745,000 based on all sales, right? So average price point, and then we're looking at that from the beginning of last January, so January 1st, 2025, and we're looking at January 8th, 2026. So obviously this is going to swing quite a bit. We need to see what happens over the next few weeks for the rest of January finish for this to even out. Now there's probably some big sales there, so it bumped it up quite a bit, but let's see what actually happens. One new thing I'm going to do here is I'm going to do the line by line. So this is going to be a little bit different than what we tend to usually do. But let's take a look at the sales volume. So this one is massive, right? So we had a massive drop in sales volume. So January we have a value of 43, obviously first week of the month, so not much there. But even in December we had 521, right? That's a 34% drop month over month, and then year over year we're 10% lower than last December. So that's massive. That is, I think, are we bottoming out? That's the question mark. And I think based on this trend, right? Let's say if I go back a couple more years, I'll do that in a second here. But let's say, so where were we? So we were December, November, we were down 16% year over year and 25% month over month, right? October, we're actually up month over month by 7.2% and up year over year by 1.6. So that was that fall market that everybody was talking about. And then we fell right off of a cliff. So if you sold here, like even if you sold these between October and November, you got lucky, because right now, this is what you're looking at, right? If you sold any, even in like the summer was rough, like you can see here, like really, like there's not much happening. We were down 8%, July down 20% month over month, up about 4% over the years, 10% up from last August, very interesting there. September, 5% over last September, very interesting, but down from August, which is actually interesting. Typically, I do see August a little bit slower than September, and September is when that fall market does kick off. So that I found a little bit interesting. But let's take a look here. So this one is going to be very telling on what to expect over the next few years. So let's go all the way up to, let's avoid 2022. We're going to go straight to 2023, and we're going to go January 1st of 2023, and let's see what that brings us. It's populating right now. And that's your transaction volume. So that's how many homes have sold. Now, here we go. This is perfect. So this is what we were talking about, right? We want, like, if you're buying in this time period, this is what you want to see. The transaction volume being very, very low. Obviously, the 43 number doesn't matter. Let's take a look at a month back. 521. This is obviously going to go up because 43 homes have sold in the first week of January. Now, let's take a look here. So what did we see in January? So we had 500 homes over the first month. And then what happened? Where did it peak? So it peaked. We had the most sales happen in May of 2023. Okay, so that's a good peak. So everybody looking, you got to be buying. You should be buying probably up until March, right? If you're waiting till May, yes, I know sometimes inventory is a difficulty, but if you're waiting till May, you're probably paying the highest point. And we'll go into that next, just because I'll bring up the average price point. So this is going to help buyers and sellers differentiate on, first of all, when should you be selling and when should you be buying, what pitfalls to avoid. So this is something you really want to watch closely. If you're working with an agent, you want to know what these stats look like, and you want to know where you are in that position, right? Like if you start searching today, you see you have a pretty small window, right? Maybe you don't find everything you like, but your next window is probably like, do you really want to be buying between end of March and wait until June or August to get back to that same price point? That's kind of like, we're going to go into before I talk about the prices, let's look at the transaction volume, right? So peaked in May of 2023. When did it peak in 24? May of 2024. The most transactions happened that year, right? This year that just passed, May of 2025. So if you're a seller, based on the trends, you got to be listing between March and May, because if you're listed in May, then you might not sell till June, where the prices are already dropping, right? Or the activity is already dropping, so the transactions. So you want to be on the way up rather than going on the way down. So keep that in mind. Now let's switch that to average sale price or average list price. So average price, one sec here. Let's go average price. Okay. No, is that the one that I wanted? Okay. So, average price in 2023, it started off at 634 the prior month. So December of 22 was 624, and then went up to 634, right? Then it built. April 712, May 694, and it kind of just stabled off until it dropped, right? And then we hit a bottom in December 648, which is still 13 grand higher, right? Than the year, right? So if you waited a year, you still had to pay more. In January, it went down to 642. February, up. April, you hit the peak. 711 is your price point. And slowly, and then we taper off down to December 659. Again, higher than the last 2 years, year over year. So as you can see, like there is dips and bounds, but the more you're waiting, the price is gradually going up. Even if you say, okay, well, I started shopping in August of 22, prices were a little bit high. I waited till this December, then I waited till the December after that. Prices were really good. Yes, maybe they were, but you were still paying on average a higher price point than the 2 years before that. So the waiting game really doesn't help a lot of people. It's just finding a time to buy when it makes sense for you, right? That's what I always say. So December, then we started building. And then this year in May, it hit 745,000, which is massive, right? That's the highest we've had since all the peaks. So 711 and 712. Okay, so a massive, and this was considered a down year, right? So the price points actually hit higher. Then we had a nice peak here in October of 2025, 719. Now, obviously, we're at a high price point right now. This is 1 week of sales, so don't take this like as it is right now. We gotta see what happens until the end of January. The next one I'm going to go into is the months of inventory. So, how many months of inventory? This is speaking volumes to me right now. So, January 26th, we have 6.45 months of inventory. That is considered a huge seller's market, right? When was the last time we had high? That was 4 months of inventory in September. November, we had 4.2, 4.6 in December, and we just jumped up quite a bit. 3.2 last January. So we have double the months of inventory than last January, right? That is a huge cause for concern if you're a seller. Huge cause, right? So what is going to happen with the market? Based on these graphs, it's all over the place, right? And then we go back here. October, we had 4.2 of 2023. January, 3.3. So yeah, we're double from the last 2 years. Yeah, last 3 years, we're double of what the months of inventory, right? So keep that in mind when you're shopping. You do have choice. Average days on market. Let's see this. Now, what is this going to give us? Average days on market is 65. That seems a bit high. 48. This one might be a little bit obscure because it's the first week of January. So let's see what happens. Let's touch base with this in February and see what happens actually. But yeah, you can see January is typically the highest average days on market and it starts dropping, right? So as the sales start increasing, the average days on market starts dropping. But the lowest days on market we had last year is 27, which is like not good at all, right? Like the average days on market way back in like, let's actually take a look. Let's see what the average days on market was in COVID times, right? Let's actually go even further back now. Let's go to 2017, January 1st, 2017. Let's see our like where we've been going, right? So this is a perfect example. We are very similar to a market of 2020, 2017. Prices are obviously much higher, and this is kind of what we want to see. But you can see the average days on market has been going down over the past 10 years, right? 9 years. Like this is, we were already heading towards a buyer's or a seller's market over the past 10 years. And then COVID obviously exploded it. But like even here, 2018 and 2019, these are massive, massive drops compared to the last 3 years before that. And then here we've only been increasing. So what is next? My question is, what is next? I think this spring is going to be very, very strong, but we'll see what happens. And let's go into another one here. So percentage of list price. So this is what everybody asks me is, how much can I offer below asking price? So let's see, what is somebody average sale price to listing price? Let's switch that. Let that load up a second. So right now, the average home is getting 97% of asking price. That's the average home. Not every home, it's just the average, right? So if we start going back, 97.6 in November, 98 in September. So people were paying more for these homes back then. What does this look like? 98.2. And let's see what the peak. So 98.6 in May of 2024. Let's see, May of 2025. Yeah, 90, like almost 99%. So most people were paying pretty much asking, or 5, 10K below roughly. Right now is your time to get a deal. This is your clear sign. You have the most inventory. You have, the average person is getting a good chunk off of the inventory that's available, and there is the most amount of listings to choose from. So if you're a buyer, you have choice, you have negotiating power, and you have the ability to put in whatever conditions you want pretty much at this point, right? If you're a seller, you might be buying something. So yes, maybe you're going to win on the buy side, but you got to be prepared to sell aggressively on the sell side and make sure you have the right marketing and the right game plan in place before you put it on the market. So that's average sale to list price. Active listings, I think we talked about that one already. Let's just go back to it one more time. I don't think I think we just did days on market and months of inventory. So let's let that load up. What does that look like? So active listings, we have 2,359 active listings. That's 20% more than the year before. So last January, we have 20% more than last January, right? And you see here, so last January, December, 1,800. Last January, we had 1,900. We have 400 more listings pretty much than last January, which is insane. And last January we were 7% more than the January before that. So this is really like anybody that was buying and selling during these times, you're in for a different story now. Whether you were a buyer or a seller then, this is very different times, and you have to be able to adjust, which is, it can be a good thing and a bad thing. It depends on your situation. I'm gonna do a few more here. Total dollar value, we don't need to see that. Transaction volume, average price, I think we looked through that. Active listings. This one is a little bit different. So of the active listings, right now, what price points are the best, or what price points have the most inventory, right? Between 300 and 399,000. So that's your condos, condo townhomes, condo apartments. That's probably where you're looking at the most. 277 listings. Another big one is townhomes. So you have 217. Like this is going to be mainly townhomes. 217 between 500 and 600. 244 between 600 and 700. This is also going to be some small detached homes. And then detached is pretty much starting at 700 and up. 187, and then you get to your luxury points where you're at $1 million and up, million to $1,250,000. 133, and then anything above 1,250,000, 60, 48. So these are all very different things, right? The affordability here is a much smaller pool rather than it is here, but also here you have the most negotiating power. Now, if you're somebody buying in this range, obviously you got to see what's out there, and each neighborhood might not have these ranges. Obviously, like the 2-3 million, that's going to be select neighborhoods only, obviously. And yeah, so let's see what else. And that's since 2010. The states. So let's go. Let's go to 2025. Yeah, no, that's obviously current active listings, but I don't know why I just did that. That's fine. So yeah, what else was I going to take a look here? I was going to take a look at market insights. Let's go to Ottawa again. Okay, um, so this is for all property types. What I'm going to do is I'm actually going to include this as a PDF for everybody so you can see it. And that'll be attached in the link so you guys can see all this graph, and then you'll see what's available. Then compare locations, so we won't do that. We're going to do a market report for Ottawa. And I'm going to include this one as well, so I will export that as an image. So this one is huge, right? So so current month, we don't have, so this is not going to obviously have anything for January because the January numbers aren't out yet because we just started January, but we have the current month, which is December, and we're going to look back the previous month, right? So average price is down 3% month over month. It's up 0.7% from year over year, and the change year to date is 2.9%. Okay. Transaction volume, we're down 35%. That is typical for December, and it's probably going to be very low for January. I don't see us being higher than 521, especially the fact that we sold 43 homes in the first week of January. I expect it probably to be somewhere between the 350 to 450 range, if not less. If not less. Average list price 724,000. And the prior month was 714. So that's a little bit surprising, but that could also be a lot of larger units selling, which would bring the average up, right? If they didn't sell those average, if those higher price ones didn't sell in November, the likelihood of them and them being sold in December is obviously going to bring that average up because it's a different price point. Percentage of list price, or sorry, percentage at list price. So how many properties sold at list price? 5.4% of them. Above list price, 7.5%, and below list, 87%. So on the 87% of the time, you should be getting a discount from the property. Now, does that mean you're getting 10K or 100K off? That's a big difference because different price points will have different negotiation ability. Average days on market is 48 days, which grew from 39, which is a massive increase. So keep that in mind. But that again is very typical for a December market. So just because you see that right now doesn't mean it's going to stay for the next 3, 4, 5, 6, 7, 8, 9 months, right? And then yeah, total dollar value, that's fine. Now let's go into a few other ones. So let's talk about rates. Obviously, the Canada bond rates. This one is pretty big to talk about. This what I've heard from multiple sources in the mortgage industry is that they're planning to drop rates by 0.5% over the next 6 months. So that could be, they're not, I don't think they're going to do anything now, but I think over the next 2 months, they'll probably drop 0.25 and then another 0.25 the next 3-4 months after that, which will bring us down another 0.5. So the current bond yield rates are 2.869%. So you should be getting somewhere about a 1.5 to 2% higher than this. So expect somewhere between the fours to late fours or high fours, pardon me. So between 4.12 to, I have seen some people get the 3.8s, 3.5s, 3.6s, but that's select customer base. That's not everybody. So keep in mind when you're shopping, if you have a previously locked rate from before, you should be buying now because right now you have the best rate. If you locked it in at 3.7 or 3.85 when it was offered the last few months, if you lock that in, you got to be buying today. I don't care what the circumstance is. You got to be pretty much buying today because if you wait, first of all, you might lose that rate. So it could be a $100, $200, $300 difference for the same home, or a worse home, maybe a better home, but that's all up in the air. If you're waiting for inventory to come up, guys, you have a lot of inventory available, so don't wait. Don't lose the good rate that you have, because we don't really know what's going to happen with the fixed rates. Yes, they're saying these things, but we don't know, right? Like, um, our last rate they held at 2.25, which again, good news. We have a policy rate announcement and an interest rate announcement January 28th. That's going to talk about inflation, which I'm sure there's going to be a lot of because of the Christmas holidays, high spending, big spending time periods. So I don't think they're going to drop the rates then, and I wouldn't be surprised about a rate increase personally, but you should be happy with a rate pause or a rate hold. I think in March we will get a drop, because that's going to be the kickoff to the um, spring market, right? Which everybody boasts about. Everybody's excited about the spring market. Do I think the spring market is going to be better this year than it was last year? Yes, I personally do. Do I think it's going to be the same as 2022? No, I don't think it's going to be anywhere close to that. I don't think we're going to be I think we're going to see a growth of maybe 2 to 3%, kind of what we've been seeing over the past couple of years. I don't think we're going to see those COVID prices. So if you're thinking that you're going to get some dream number, stop thinking it, because there's no dream number. The dream number is gone. Right now you're competing. You're competing with other listings. You're competing to get the buyer. You're hoping that even a buyer wants to come in. Like, for goodness sake, guys, we got how much inventory, right? Like, active listings were like, this is insane. Like, we have a massive amount of active listings. Like, months of inventory, we got 6.24% of inventory. That is clearly defined. And the definition of a buyer's market is when you have more 6 months or more of inventory, and we have that currently. So if you're a seller, do the right thing, get ready to price appropriately. Don't price hoping to be 10% above market and you're going to negotiate down. Nobody's coming. They know what these houses are worth. They know they're not paying. Like, if they've been they've been shopping for past 6 months to a year, that we've had more and more inventory. They know what these houses look like. They know what they're worth. It's not like you're not going to surprise anybody. So keep that in mind. Interest rate and policy announcement again in April of 2029, or April 29. Then an interest rate announcement in June, July 15th, September 2nd, October 28th, and December 9th. So keep in mind these big dates. I'll put them in a link in the email as well. And that's pretty much all I got, guys. Like, this is I'm excited for this year. I think we're in for a strong year real estate wise in terms of transactions. Typically, what I do see is the more inventory we have, the more overall volume we have. Does that mean all the inventory sells? No, it doesn't mean that. But what it means is that there is opportunity for buyers. There's going to be the rental rates are also very high. So if you're a renter and you're seeing the prices come down, you're like, well, I'm paying $3,000 a month to rent a townhouse. Why don't I go and buy it and spend $2,600 a month or $2,500 a month, or maybe it costs me $2,400 a month, whatever, right? Like, with utilities, you have an asset that's appreciating over time, as we've seen in these past few charts, right? I clearly went through them, that the price year over year, it does eventually just keep rising. Yes, there's leaps and bounds, but you're not watching this on a short-term basis. You're not buying to sell it in 6 months. You're not a flipper. The average consumer in Ottawa is buying and holding for at least 5 to 7 years. And that's completely fine. Yes, there's some investors that are looking for the perfect time to buy, which, we can easily see in those time periods, and the perfect time to sell, which again, we can easily predict. So again, is there a perfect math to it? No. Sometimes you pay a little bit more. Sometimes you sell for a little bit less. Yes, there's all these different variables, but I think overall, if you're a buyer in this city and you're buying to keep for the next 5 to 7 years, you're not going to be in trouble at all, as we've seen, right? If you're a seller, if you're selling now, the next 6 months are going to be crucial. You got to be pretty much have your property ready to go, spick and span, perfectly clean, perfectly laid out, staged, all this stuff, and ready to go by, in my opinion, by February, March, April, or May. That's your absolute latest. If you're in June, you're taking a 50-50 gamble on if you get top dollar or if you're going to be on the declining amount, which, typically high traffic areas, high volume areas are going to have that. If you're in a sought after area, you might not have much to worry about. Now, my three biggest tips for buyers and sellers. So if you're a buyer right now, if you don't have your pre-approval locked in, lock it in ASAP, because you don't know what's going to happen with the rates. Second tip, if you're not pre-approved, get pre-approved right away. because the banks are going to start getting very busy, especially come February and March. You don't want to be looking for a pre-approval because you might be finding the perfect home for yourself, might be priced appropriately, and you're dealing with a motivated seller. You want to have all your ducks in a row before you start doing that. Next tip for the buyers is tip number 3: go see some homes. You're Don't jump on the first home you see. Always go see a bunch of homes. Maybe spend a day of it. Maybe go see 4 or 5 homes. Compare them one by one. Run right after you get the other, so it's all fresh in your mind. You're understanding the information. You're understanding the differences about these homes. Once you see that, then you start making more decisions. But then you say, okay, am I buying any of these homes? Yes or no? Do they tick any of the boxes I want? Is there a list of 8 things or 9 things or 7 things that I want in a home? Do they tick these boxes? If they don't, keep searching. If they do, start putting in offers, because you don't know, there's a lot of buyers out there. You don't know who's going to jump on yours. Just last week, I saw 5 homes. Out of those 5 homes, 2 of them just got offers yesterday. So keep that in mind. There is activity in the market, even though it's typically a slower time. For sellers, big, big, big important thing here is get your home ready. What is getting your home ready? Declutter, full clean. If you have a busy family life, do not waste your time cleaning. Spend the $150 and get a professional cleaning done in your property. Professional cleaning, I have access to those companies. They will come in, do a full clean for $150, maybe 200, 250, 300, depending on the size of the home, obviously. But you need to get those things done so you stand out and that the pictures come out perfectly. Speaking of pictures, you want to get photos, drone footage, video tours, sometimes floor plans, sometimes get a video walkthrough. All these things that help market your home, you want to get them done properly. Pick the right day to do it. Don't do it on a snowstorm. If you have to delay your listing by a couple of days, do it. Just delay it out slightly, because the difference from listing in February, March, April is very big than listing in June. Yes, like I'm not saying delay it till June, but like if it's gonna help find the perfect day, then do it. Just make sure you do that, right? And then the other thing for sellers is make your home available. Don't decline showings, especially during the winter. I know it's gonna be tough for you, but you want to make sure that you're doing your most you can right now to maximize your value of your home by not declining anything. I know I see a lot of sellers, decline showings. Like, it's all good, you know. Are you selling your home and you're trying to get top dollar, or are you wanting to stay in it? If you want to stay in it, take it off the market and live in it. Because at the end of the day, um, buyers are also on busy schedules, and if you want somebody to pay top dollar, make your home accessible so that they can come see it. If you have to step out for half an hour, like typically an average showing is 30 minutes. So like, what's 30 minutes? Go out, go for a drive, go grab a coffee, go grab a Timbit. Doesn't matter. Just do something for 30 minutes. Come back, house will be perfect. I know it's a bit of a headache. I know showings come in last minute sometimes, but it's all good. Get them in there so at least you either have feedback or an offer in your hands, one or the other. And that's pretty much all I got it for now. I'm going to be uploading some more videos on the YouTube channel, guys. If you have any questions, I'm going to be uploading tips and tricks. I'm going to be reviewing some analysis from the headlines and stuff like that. I'd love to get some feedback from you guys. So if you want to leave a comment, feel free. If you want to drop a like, love that. And if you want to subscribe for more of these videos, feel free to do so. I'll see you guys in the next video. If you have any questions, feel free to either respond to this email. If you're not on the emailing list, if you message me or DM me on either Instagram, Facebook, I don't think, yeah, on YouTube, you can just leave a comment. Just let me know that you want to be added to the mailing list, and I will put you on there. I typically do it once a month. I'm thinking about adding it maybe once every 2 weeks, depending on if people do want it, if they want the info. If you don't want the info, I don't want to bombard you with a bunch of emails, because you'll be able to see it on the YouTube channel. So YouTube channel is typically the easiest way to get all the news and info and updates and tips and tricks and all that stuff. So if you don't want to do any of the stuff on by email, get it directly sent to you, just let me know and I will just have you just subscribe to the YouTube channel and you can just follow it from there. And that's pretty much it. I wish you guys a happy new year. Thank you so much for the support all these years, and I look forward to seeing you guys in the next one. I hope you guys like this new layout that I've done. Like, we got this new stats report, so this is going to give us a little bit more in depth. As you can see, it's a lot more in depth than the previous ones. Like, we were just looking at these basic ones, and it doesn't really show much. I do like these stats a little bit more, so it is a little bit more refined. And that was my big goal in 2026, was to double down on what I've been providing you guys and give you guys a lot more info to make the best decisions, whether you're working with me, whether you're just first time home buyer, whether you're upsizer and downsizer, whether you're relocating. I just want to be there to help as much as possible. So again, thank you guys for everything. I'll see you on the next one. If you have any questions, feel free to like, subscribe, DM me for any questions, and I'll see you soon. Have a great day. Bye bye.